Good morning, everyone, and welcome to the Anchorstar Wealth Market Update. I'm your host, Allison Anchorstar, and today we'll be talking about the stock market performance in April, Steve's forecast for the rest of the year, and the review of Anchorstar Wealth investment strategy. But before we begin, as a reminder, this financial education presentation should not be construed as personal financial advice. Full disclaimer information is available at anchorstarwealth.com. Good morning, Steve. April was an awful month for the stock market. Just how bad was it?
Well, it was pretty darn bad. So welcome, everybody. Thanks for that intro, Allison, and goodbye, April. See welcome, May, right? It was a terrible month overall for the stock market. And it was honestly, a lot of it was packed into last week, and we'll review that here just in a second. Here's today's futures, relatively flat. But you see the headline right there, in the bold black letter. Stock futures fall as NASDAQ posts worst month since 2008. So imagine where you were 2008. Not you, Allison, but most of my listeners imagine where you were in the middle of the global financial crisis. We had major institutions. All the airlines were bankrupt. We had major financial institutions brought to their knees by the housing market crash. We were looking at losing, we had needed an entire government bailout for the financial industry. Does that seem as dire as what was going on in April of this year? You've got to be kidding me. This is such an overreaction to the downside. It makes no sense at all. So we're going to peel that back a little bit, but really trying to compare April of 2022 when what exactly did happen. Not much happened, right? Inflation showed up back in January, February. What was, no changes in the Ukraine Russia conflict, if you will. The Fed's been on pace for what they're saying. We do have the Fed meeting this week. Maybe that's scaring everyone. There is some talk of a 50-point basis interest rate raise, maybe 75. We're not talking major institutions on their knees. We're not talking the entire airline industry shut. I mean, this is just ridiculous that these two are even being compared, right? So it's a huge move down. Most of it was last week. I did want to cover the exact numbers are down here at the bottom. I know it's a small screen. For the Dow was down. Don't see it now. There we go. Right here in the middle, if you can see that. So the Dow is down in April 4.9%. So it shows you how much more the NASDAQ moves than everything else. Dow was down 4.9%, S&P down 8.8%, and the NASDAQ was down 13.26% just on Friday, or just just in the month of April. And again, it was 4.5% on Friday. So, I mean, just kind of a crazy move down. When you look at the QQQ, there's your 4.5% move off on Friday. And here's where we are overall on the chart. So you saw Amazon really kind of bring things down with the big sell-off in Amazon on Friday after missing earnings and guiding down, if you will, Thursday after the close. So really a lot of negativity in the air. Again, you have inflation. When you talk about themes for 2022, you have inflation. Obviously, was the primary concern, in January. Are we past peak inflation? I think so. We're starting to see that number break a little bit. So that's the disease. You have the cure, which is the Fed raising rates. The cure can be worse than the disease. We did have a negative gross GDP print. So, halfway to a recession. If things don't change, I think, we probably will end up in a recession now. Where that was kind of unlikely before all of this kind of just went raging south in April. And then you have the Ukraine-Russia conflict, which again, no real resolution in sight, even though there's things I think personally are trending better. But it's lasting longer than I thought it would. I said it would end up in May, and I don't think there's any signs of that. That is back when the 2014 started in February, ended in May. So we shall see how all that plays out. But overall, Allison, just an awful April. And I think we're not likely to see something like that again.
Next, what do you foresee for the rest of 2022?
Well, that's where this chart comes in hand. I'm going to switch over to ThinkPipes. Again, this is a TD Ameritrade product. This is live. This is the S&P 500, so not the NASDAQ, but looking just at the S&P 500, it has the technical indicators on here, which is why I like to show you this. So you have the run up to late last year, right? So almost to the peak S&P 500 and in December, late December of 2021. Life was good. Everybody's, everything is awesome. The Lego guy running around. Then all of a sudden you have this, you had to move down, up, kind of like, do you buy the dip here? Sure, you do. And you bought up and it was like, nope, dipped again, bounced off of that, dipped again. And then now you just had this huge run back up, retraced over 50%, and then it right back into the bear market for the NASDAQ. Not quite a bear for the S&P 500. So overall, when you look at the RSI and the MACD indicators, both are now showing oversold. When you do see these oversold conditions, that's when you get these bounces. So I do expect there to be some bounce. This is really an interesting week because you have the Fed meeting on Wednesday. So I don't see a significant move higher until after the Fed meeting Wednesday or the day of the Fed meeting. Again, it's a 2-day meeting, Tuesday and Wednesday, but they release at 2 p.m. Eastern. That's when Chairman Powell will speak and basically go over what they decided to do. Quarter point or 50 basis points, I think, is the expectation. 75 would, I think, give the market some angst, if you will. But we've seen this before, and this is what's important to keep in mind. Is going back now to CNBC and looking at the NASDAQ chart over the long term is, we've seen this movie. So here you have a 5-year chart. So we'll get rid of the big, ugly red numbers because nobody wants to look at those. But as you roll this up, we've seen this movie 3 times really since I've been in business. So you had December 2015, which hardly anybody remembers, but we did try to raise rates there and went right back to zero. You had December of 2018, which is right back in here where you had the market selling off anyway. And then December 18, you saw in the NASDAQ, you saw a 20% sell off in a month because of several interest rate raises. And then look at the bounce back from there. But by 4 months later, we're already back to new highs from the December 18 debacle. And that phone is ringing off the hook there. So we saw it in 2015, we saw it in 2018, both off of interest rate raises, which is what we're seeing now. Of course, March 2020, you saw the 35% drop over the course of about a month and a half, and then you saw the huge retraction out of that as we opened up the economy and everybody, things started screaming higher. So now we're back in that situation. So these things sell off and they come back strong, especially in technology because the margins are there and these are companies that are changing the world. So what do? You just have to be patient during this time. Do I think by the end of the year, we're going to be back to new highs? I think that's aggressive. I don't think so. But I certainly think we are on a path. We're going to be on a path to recovery soon. I said that I thought the bottom was in here at 324. I was wrong, right? We're down at 312 now. I just don't see this continuing down. There's really nothing that is, if we're talking major, think of 2008, major institutions on the brink of bankruptcy. Right? The movies that were made off of that margin call and all those things, it was just terrible. We don't have that now. We have inflation, which is annoying, and things are getting a little more expensive. But we're not on the brink of bankruptcy by any means. So anyhow, that's why I think this is oversold here. Am I buying? Yes, I am. I remember as an asset manager, I'm a net buyer. I'm buying assets and put them in your portfolio. So is this I wouldn't say it's the all-in moment, but if we drop down into a 300, that's going to be an all-in moment. And if that happens this week, it's going to be like, just start sending in your cash because we're not going to get an opportunity like this again. So, do we get back to new highs by the end of the year? Probably not, but I do think we do a steady march higher, that 8 to 12, 15% from where we are now. If you put new cash in now, that's the kind of return I think you're looking at. The other cash that you put in right here, well, okay, if you put it all in right here, well, then you're going to be down and not be back to even. But if you've been, investing with me for a while, then obviously you're going to be back to good graces. And just remember, nobody wants to brag, but there is, if the market's down, 21% and your portfolio is down 16%, I'm not going to call you up and try to slap a high five and say, hey, look, look how awesome we did. But remember, that is a metric. That is good. So you do have diversification in your portfolio. We do have best of breed type stocks. So, yes, the portfolios have taken a hit, but generally you're not down that 21% since the beginning of the year sort of thing. So that's what I would say, Allison, for my forecast for the rest of the year.
Last, both Warren Buffett and Elon Musk were very vocal this weekend about how to invest. Can you relate what they said to Anchorstar Wealth investment strategy?
Yeah. So, I grew up really, from way back in the day as a young person, I started reading investment books and, read the Random Walk Down Wall Street. And I followed Jim Cramer for a while to hear what he had to say, and David Einhorn, and all kind of came back to, I'd read it, synthesize it, and then go back to what do I believe? Warren Buffett's right. You want to keep it simple. You want to buy assets that produce, products or services that that make money and generally a dividend. Again, I like tech stocks. A lot of them don't have dividends, but if you have one like Apple that does have a dividend, it kicks off cash flow, right? And that's that passive income everybody talks about. You want passive income, not passive investing, but passive income, right? So build a portfolio of dividend stocks, and you have that, right? And that's his biggest thing. And he talked about why he and Charlie Munger are against Bitcoin. Just doesn't produce anything. That's also why he doesn't invest in corn or commodities or orange juice futures, because those are trading vehicles, right? That don't really produce anything. So they had their first in-person meeting since COVID. Buffett did say it's turned into a gambling parlor. I would say that there is an unnecessary amount of trading going on. I do think that, it's not Robinhood's fault, but Robinhood app gets the blame for this, for the gamification of investing, right? Turn into a game. It's like playing Angry Birds or, Candy Crush or, Clash of Clans or whatever, but this is the real world, right? So you don't want to turn it into that gambling sort of sensation. So you have, the easy to use app that's kind of like made for the younger folks, right? That looks more like a game, combined with now you have all kinds of crypto coins that can really, they don't produce anything, right? So, it's kind of just flows up and down, and, it turns it into a game. So that was kind of his point. Gambling versus investing, the definitions are very close, but exactly 180 out. Remember, investing is the allocation of capital with the expectation of gain and possibility of loss. So process that for a second. And then gambling is the allocation of capital with the expectation of loss, but the possibility of gain. That's what keeps people going back to the lotto is, what if I hit it, right? It would change your life. I would say arguably may not change your life for the better just because you win the lotto. You might think so, but things change. So you want to invest in things that generally go up over time. That's why we're in best of breed type stocks. That's what Buffett does, and he loads up on those. I will say that Elon Musk said a couple things this weekend that I wanted to highlight for everybody. One I put out on Facebook last night when I saw it, and the other one I didn't see it till this morning. But the bottom one here, since I've been asked a lot, the tweet really sums up what we do here at Anchorstar Wealth. He says, buy stock, and this is his words, not mine, but they're better than mine, right? So I'm going to steal them and make them, we'll use them. I'll credit them. Buy stock in several companies and make product services that you believe in. Absolutely. I will tack on that are changing the world, right? Or making the world a better place, because that's generally what I talk about for best in breed companies. Only sell if you think their products and services are trending worse. Don't panic when the market does. That's where we're at. Am I selling Apple? No. Am I selling Amazon because it dropped 14% on Friday? No, I'm buying more. We can't wait for the market to open. It has 33 minutes and I will be buying Amazon. So, and don't panic when the market does. The market's got nothing to do, the day-to-day fluctuations or month-to-month has got nothing to do really with your investments. Now, if you have a short-term fence coming up, the only time I will say where you do need to manage that is if you had money from a house or you owe some taxes or, any of those sorts of things where you're planning on using some capital, you're going to be on a little bit of a ride and you might be at the whim of a bad market timing. But there's cash flow and then there's wealth building. Investing is about wealth building. If you choose to take money out because you have either a bill to pay or you want to incur something like, upgrade your house, that sort of thing, then you're choosing to do that. I would not sweat. When you need to take cash out, take cash out. Don't outthink it. Just boom. And there's ways to tax loss harvest, and there's all kinds of things that can make that, less emotional for you, whether the stock market's up or down. But that's what he says. This will serve you well in the long term. Obviously, we're 8 years in, and it's been a fantastic strategy. Even though 2015, 2018, 2020, now 2022, there's times you just need to grit your teeth, grow up, and look away if you have to. But get right back at it, right? And go find some extra cash, because now's the time to start buying it. And there's one thing about passive versus active investing. Jack Bogle, Vanguard, says index passive funds were too great a percentage of the market right before he died. And that's what, he was kind of the father of the passive investing. That's the just buy the SPY and fall asleep. It's the old just buy, just index it, just buy the overall market. Well, you're at the whim of the entire market if you do that. I think it's a little lazy and not quite as effective. And then he says there should be a shift back towards active management. And I agree, obviously, since we do primarily active here at AnchorStar Wealth, but not hedge fund type active. I mean, you don't see a lot of transactions, but we're certainly a focused portfolio. Again, highly exposed to tech, which gives us, the full ride of the NASDAQ when it does its thing. So anyhow, those are just some investing thoughts I wanted to kind of recap. Some people may need to hear that right now, as they're maybe starting to get worried about their 401k or their portfolio, their IRAs or their taxable accounts. This is all part of it. The best part I can tell folks is when they start investing, if they're new to investing, it's just like anywhere in the world, no matter what kind of paradise you're in, there's going to be thunderstorms, right? Same thing with the market. There will be awful markets. It's going to happen. If you know it's going to happen ahead of time, you just think about what you're going to do. And you've heard me talk over and over about, you get out of the risky stuff at the 5 to 8% down, you really start focusing on best of breed. And once it gets past 10% down, you are holding the crap out of the best of breed stuff that you've focused your portfolio on, and grit your teeth and try to add more if you can. So that's what I've got for you today, Allison. Thanks. That's a real good question. A lot of stuff we covered this morning.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@anchorstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Anchorstar, and we'll see you back here tomorrow.